Will Bitcoin reach $100,000? With the Fed printing out trillions of dollars to bail out the economy, every self-respecting economist will tell you that the dollar is set to lose value. Baby boomers turned to gold in the early 70s to protect their savings, but millennials today are turning to Bitcoin, as many of the gurus predict that it will reach over $100,000 a pop by the end of 2021. But will this really happen? How and why would Bitcoin, the most famous and widespread cryptocurrency in the world, more than quintuple its current value, and why now when the world economy seems to be headed into a depression that could last for a decade? In today's video, we'll cover all of this and more in a moment. So stay tuned and don't miss your chance to cash in big on Bitcoin when it goes to the moon. Meanwhile, please remember to hit the like button, subscribe, and turn on the bell icon to be notified of all of our upcoming videos for different ways to cash in on the new digital era. You'll be glad you did. What is it about Bitcoin these days? Whenever the economy goes haywire and starts to fall apart, people look for ways to hedge against the risk of losing their money. Some invest in real estate and stocks, others invest in gold or silver, but today, many are also investing in Bitcoin. Many of us have heard of Bitcoin as the king of cryptocurrencies, and we've been led to think that it's a sort of digital money used to pay for stuff. While this is in principle true, and we can use Bitcoin to pay for certain purchases and services today, that's not the reason why people are buying Bitcoin. You see, people see Bitcoin as a long-term investment opportunity, something you can put your money into and that will preserve or gain value over time like the gold. The problem with fiat currencies is that, as their name suggests, they have value because governments say so. They're no longer backed by anything that has a tangible value like gold, for example. The amount of currency in circulation at any given time is completely dependent on the central banks such as the Federal Reserve. And when they print out more money, all the money that was already in circulation in our wallets loses value. This is exactly what's happening now as the Fed prints out trillions of dollars to keep up with the stimulus bills that try to get our economy back on its feet. But what makes Bitcoin different? Besides the obvious difference of being completely digital, Bitcoin doesn't rely on a central bank, government, or any other kind of centralized institution. Because the maximum and total amount of Bitcoin that can ever exist is 21 million, it is often compared to as the digital gold. It's an open-source computer program that generates and keeps track of all the existing Bitcoins and their transactions, not the central governments. But that's not the catch. The catch is that the piece of software doesn't operate on a single computer, but on a network of interconnected computers called miners, whose job it is to collectively verify all transactions. So Bitcoin is completely independent of any and all governments or companies, no matter how big these institutions are. And Bitcoin runs on one of the most secure networks in existence today, the blockchain. Why does Bitcoin have value? If you're of an older generation who values tangible goods and still doesn't quite get the point of digital assets, don't worry, you're not alone. There are many people who still don't get why Bitcoin has any value at all, let alone why it would possibly reach $100,000. So why does Bitcoin have value? Well, the answer is surprisingly simple. Bitcoins have value because people agree that they do. Period. That's all there is to it. But why would people be agreeing to that? For the same reasons that we accept dollars, euros, and gold have value. Because they make it possible for us to buy things that we need without resorting to the archaic barter system. But there are also several reasons why Bitcoins are better today than fiat currencies. Number one, they integrate naturally and seamlessly in today's digital and globalized world. Did you know that PayPal just officially announced recently that they now accept Bitcoin globally as a form of payment? Number two, they provide a more direct peer-to-peer payment system that is a much faster and cheaper way to make payments. Number three, since it's decentralized, it's impossible to hack it, making it much safer. Number four, No one government has the control over Bitcoin. Number 5, it's totally open source, so everyone knows exactly how it works. No big brother pulling the strings behind the closed curtains. Number 6, the algorithm has a cap on the maximum number of 21 Bitcoins that can ever be created and makes it harder to produce new coins every day, so it's naturally deflationary. This last bit is the most relevant to today's topic, and we'll elaborate as we go along. But before we get there, let's talk volatility. Although many people firmly believe that Bitcoin will go up, we've all seen its price go up and down more than a Six Flags roller coaster, peaking at almost $20,000 in December 2017, only to plummet back down to a quarter of that value in the following months. This volatility is due to the fact that Bitcoin is still a young asset and it's still in its price discovery stage, swinging between its true value and its speculative value. However, if you look at the broader picture, fact is that Bitcoin has been steadily increasing in value over time, making it a great long-term investment. Why does the value of Bitcoin increase over time? So we agree that Bitcoin has value, therefore it does, but why does the value increase? The key is in the algorithm, which limits the amount of available Bitcoins and makes it harder for new ones to be produced over time. Similarly to the supply and demand concept, it's just like a natural resource that slowly runs out. As it gets more scarce and less available to the population, its value increases higher and higher. But why $100,000? To understand that, we need to see how people predict the evolution of asset prices. There are two different ways to do this. One is based on statistics and uses different models to forecast the evolution of prices in the future. This is called a technical analysis. On the other hand, there are those who prefer to study the markets, the global economy, and the way people behave to understand why prices change and then predict based on that. People have used both methods to predict the future price of Bitcoin, and they have both reached the same conclusion that in the following years, Bitcoin will reach the six-figure mark. Let's see these two analyses in action next. The fundamental analysis. The fundamental analysis seeks to understand what pushes the value of Bitcoin. According to Mark Moss, he estimated that Bitcoin's total market value could easily reach $10 trillion or more, giving each Bitcoin a value of roughly $500,000 apiece. Here's how he reached that number. Number 1. People buy Bitcoin for the same reasons they buy gold, as a store of value. So if only 10% of investors switch from the gold market, worth $10 trillion, to Bitcoin, we would have $1 trillion of value in Bitcoins. Number 2, some people put their money in Bitcoin for the same reason they put it in offshore banking systems like Swiss banks, to put it away from the reach of governments. Since some Swiss bank accounts are being seized, Bitcoin is an attractive alternative. If only 10% of those savings go to Bitcoin, that's another $4 trillion added to the market. Number 3, finally, there are still those who intend to use Bitcoin as a currency, so the Bitcoin can take a piece of the Forex market as well, which sits around $80 trillion. If only 5% of people take their money out of Forex and puts it into Bitcoin, that's another $4 trillion. After we add that up, we end up with a market value of $9 trillion, give or take. With around 18 million Bitcoins currently in circulation to date, that works out to $500,000 per Bitcoin. The technical analysis, stock-to-flow ratio, or S2F. S2F is a mathematical model that relates the scarcity of an asset over time to its price. In the model, the total amount of an asset, in this case the total number of Bitcoins in circulation, the stock, is divided by the rate at which the asset is produced every year, the flow. Giving a number that represents how many years it would take to produce the current stock of that asset, the stock-to-flow ratio, or S2F. That number is then introduced into an equation, the model, which outputs the projected price of the asset. The key is that the higher the S2F, the higher the price. In early 2020, Bitcoin's stock to flow was roughly 25, which put its value well behind gold's S2F of 62. But that quickly changed in May. Here's why. The reward halving. Bitcoin's algorithm contains an internal mechanism that ensures its appreciation over time. Bitcoins are generated and rewarded to miners when they manage to verify the hash of a block of transactions. Every time 210,000 blocks are mined, that reward or the production of Bitcoin gets cut in half, so the stock to flow doubles. Because of the way the stock to flow model works, every time this happens, Bitcoin's market price increases tenfold. Other factors that affect the outcome of the model are inflation, which enhances the increase in price, and the fact that the real supply of Bitcoin is lower than on paper. This is because while the total number of Bitcoins that have ever been created is perfectly known to be around 18 million to date, an estimated 5 million Bitcoins are either locked or lost. The effect of missing coins is a lower stock, therefore a lower S2F. So when will Bitcoin reach $100,000? Plan B. The analyst that created the S2F model for Bitcoin had already predicted in 2019 that Bitcoin would reach over $100,000 by late 2021, long before we even had a clue that there was a virus. The model turned out to be so resilient that in November 2019 they stood by that prediction, asserting that it will climb to around 55,000 by the end of December 2020 and to anything between 100,000 and 240,000 by December 2021. If that doesn't sound like an attractive investment, we don't know what else does. While it may seem crazy to think that someone would pay $100,000 or more for a single Bitcoin, the fact that it's a store of value ensures that it will always make sense to do so. Gold is very expensive, yet we keep buying it, don't we? The question here is, would you choose Bitcoin over gold to safeguard your savings against inflation? Or would you rather keep your money in your fiat currency, trusting that things will pick back up in the near future? Let us know in the comment section below. In the meantime, support us with a like and subscribe, and remember to tick the bell notification icon for new videos. Thanks for watching.